Welcome to the monthly real estate update for February to March. I'm excited to share with you what's been going on in the market and opportunities that are about to come as well. What's been changing, how the mortgage rates have been rising up, and how is it affecting normal home buyers as well as sellers as well as builders as well. So let's just dive right into it. The first thing that we want to check is our mortgage interest because it influences the market quite a bit. And I'm going to use this Yahoo Finance article right here. Mortgage rates surge closer to 7%, which is what I've been seeing as well. But we always want to check our other site on NAHB. And it's not this big number that we want to look at. It's actually this one tiny bit in the fine print right here. These are what the average people would be getting. So 6.5% for 30 years, 6% for a 20-year, and 6 1/8 for a 15-year. These deals sound terrible compared to what I've gotten about 4 years ago when I did my initial purchase. So let's continue within the article. Still, high home prices, elevated rates have crushed affordability. People aren't able to actually purchase much more, this person is stating. That said, there is a reasonable demand and ability by potential home buyers to engage in the market, but there are still too few homes for sale. There aren't as many supplies. While there's still some form of demand, there aren't as many supplies, meaning sellers aren't as enthusiastic as much. If anything, I think builders were the ones that were pushing a lot of the supplies and inventory that became available. But there are still too few homes for sale from which to hope to find something suitable at a price a prospective buyer can actually afford. All combined, these things are dampening the market. So the volume of mortgage applications for purchase fell 18% compared with the previous week. I've been seeing this trend happening since last month. Mortgage applications have been declining. There was a short burst in December, I believe, but it wasn't high enough. It's kind of like a, are they going? They're not going. It's like the momentum built just a tiny bit, but it was just not enough to get over the hump and reach that high. That is because things are still expensive. Inflation is still a problem. People are adjusting to inflation. That is true, but the people's pockets are kind of staying tight. Like, they don't know what to expect tomorrow. Layoffs have been happening quite a bit. The tech sector has been battering people in that sense, right? So they're not increasing hiring. So people are able to actually afford. And I'm sure a lot of people had to cancel mortgages because they got fired, especially if you're buying a new home and you can't show that you had a pay stub now or still working at a job, then of course you're going to be let go. And that's the issue with these situations and things. Overall, purchase application volume was down 41% from a year ago, with the purchase index at its lowest point since 1995. Does that mean we're about to get a repeat of 2008? I don't think it's going to be the same way, but there are going to be opportunities that are going to become available. You just got to be prepared for it. Make sure you have your stash saved up. Do not spend money on reckless things. Make sure you have that down payment. FHA is always a great option. You do not need 20% down to get into a home. You can always start with an FHA. That's how I started. I still have that first home under an FHA, and I'm doing fine with it. It's not a problem. Of course, people are going to scare you around PMI this, but it's not that bad of a deal. For some years, you are able to deduct the PMI off your taxes. This year, I don't think it's happening for 2023 tax filings, but the previous year and the year before that, I was able to. It's not really a bad thing, right? You got the deduction, and if you did have a bigger lump of money, let's say you had 20% down or 10% down, and you only put 3.5, you could have invested that cash and have it accrued what's called compound interest into the markets. Even if you invested in an index fund at an 8-10% return, you would still beat the pace of that 3% interest rate that you would be getting off a regular mortgage, because mortgage rates are so much cheaper than the market, like interest rates. I'm talking to the stock market as well as index mutual funds market. You are able to have a bigger profit margin if you went that route with the same amount of money versus putting it all inside of the home, the equity of the home right away. So that's why I advise to do that. But there's opportunities if you don't have the 20% down. 3.5% is all you need, and at least I would say $10,000 in savings to get things started. This time of the year is typically when purchase activity ramps up, but over the past 2 weeks, rates have increased significantly. That is true. When I was looking for this first home that I purchased, around January is when I started looking, February, and I closed around April. I did see the activity in the sense that there were a bit of supplies available. I wasn't fighting people as much, but maybe because I was in a market where a lot of the fighting wasn't happening, there was opportunities there, and I took onto it around that time. But spring was definitely that time where you saw a lot of buying activities. Sellers may not have been as enthusiastic, but it opened up a lot of opportunities around the springtime. The increase in mortgage rates has put many homebuyers back on the sideline once again, especially first-time homebuyers who are most sensitive to affordability challenges and the impact of higher rates, right? On an FHA, that's the only negative part of FHA, because you're putting lesser down, you're paying 7% on a bigger remainder balance, on a bigger like principal balance that you are taking a loan out on. And that's the issue. But you can always refinance, as long as your affordability makes sense. And if you're getting a multifamily, we're going to break down the math as an example. I'm going to show you in a bit in terms of how that can work for you in your favor, despite the interest rates being where they are at right now. The pullback in demand doesn't come as a surprise. According to Jeffrey Reynolds, this broker right here, home buyers have lost roughly 10% of their purchasing power in the last 2 weeks alone due to the sharp uptick in rates. That is true. So before, if you were able to afford a $700,000 home at a 6% rate, now you probably can afford like a $650,000 home or $720,000, right? So instead of getting that big 5-bedroom house or multifamily, right, you now have to settle for like a 3-bedroom, and that's okay, right? You can always refinance into your situation down the line. Softer home prices also aren't much help for some price-struck buys either. According to Realtor.com, home prices have decreased 11% over the past 7 months. That's a huge decrease. It's an average of $400,000 in January. Still at last week's interest rate of 6.32%, the buyer of a median price home was looking at $1,985 monthly mortgage payment. That's 42% higher than last year, though 6% lower than it would have been in June 2022. $1,985 though for a New Yorker, that sounds like a bargain. Like they would jump on that, because many New York apartments, a studio goes for more than that. Like at $1,982, you can get a whole house or get a mortgage at that price. Opportunity right there. But of course, a lot of New Yorkers, they want that view, being by the ocean, the waters, the high-rise buildings, and all these renovated stuff. So some of them are paying $3,000, $4,000 for a box. You wouldn't find me in that situation at all. I would never do that whatsoever. Mama didn't raise no fool. But some people, they want that view, and I can understand. They work hard for what they want, and they want to have that bit of luxury. I don't find that to be, I don't find that to be luxury. But we all have our own meanings and understanding of our lives, of what luxury means to us. So I'm not going to knock them, but there are other opportunities elsewhere. If you have $3,000 to spend on an apartment, you could get a big home with a mortgage that you're paying the equity towards, which you get a lot of it back. You get these tax deductions, all these incentives if you went that route as well. Just opening of your mind out there if you felt stuck about that, or even had a glimpse of thinking about that. So it wasn't inevitable that demand would slow down. That is true. Demand is slow right now. Even me, myself, I'm waiting a little bit. I'm in the process of filing taxes first and seeing what the market is and see if I need to jump back in. I want to be in another location slightly, utilizing another FHA loan, right, to get the next one that I'm able to find. So the window of opportunity of some home buyers to snatch a good deal could be ending soon. I don't think so. I don't agree with that. As sellers continue to pull back their generous incentives ahead of the spring selling season. There were some opportunities that were available that we're going to dive into that's inside of this article. Yes, a lot of people are pulling back. It depends on where you are, what market you're looking at. Home builders, normal sellers, they're just holding on to things, and they just feel like it's better to wait than just take a loss right now, take a beating, right? But there are some opportunities that are happening. I have a friend of mine who got over asking price for a home that he's trying to sell. And I really hope he pulls through and step into some more opportunities for himself and expand his real estate empire. But let's look at the National Association of Home Builders. What's happening there? So at least 31% of builders reduced home prices in February, down from 35% in December and 36% in November. Home builders are the ones that are quicker to do that big drop because it's a business for them, right? They file bankruptcies, they have to, But for them, it's not like their primary thing. They're just running a business and operation. So if they have to get rid of this inventory, they're going to put it at a discount. And this is part of what can cause the collapse in the market. This is what can cause foreclosures. Some home builders may abandon their properties. They are still on some type of loans, right? Whether it's regular loan or private lending, they still have to pay back that amount. I'm sure most of them don't do deals based on just cash. Of course, they got a lot of favors for the amount of transactions that they do, but they have to do it that way. Same with normal sellers too. With the layoffs happening, I'm sure a lot of homes weren't able to get closed. Contracts had to be pulled back. That happened to me once. I got laid off literally a couple weeks before I was scheduled to do closing. That opportunity wasn't for me at the time. And this is where you got to also be like, God, thank you for protecting me from that opportunity. I know it wasn't time yet. And thank you for showing me that, right? You could look at it that way too. That's how I always look at situations when the doors are just shut down. But sellers aren't as enthusiastic. They're like, oh, we'd rather wait. Or if we have to cut our prices, it just doesn't quite make sense. But home builders, on the other hand, they got to get rid of inventory. They got to turn it back to cash. They're going to make their money back because I'm sure they made a killing during the past 2 years of COVID, the rising of the market, interest rates was low. They capitalized off that time, right? They were selling like crazy. They created a lot of supplies for people while demand was surging as well. And with the tech hiring that was happening around that time, people were moving all over. So they were just buying homes. And now we're seeing the effect of that. It wasn't a real hype. It was kind of inflated, which is not good. That's why these layoffs is happening, and now the home prices are not getting affected. This shift in things, this is where you got to pay attention. Don't do things just because you see that's where everybody's going. Do your own analysis. Always calculate before you make a move. Think 10 steps ahead so that you can kind of foresee these things before they get bad. You want to do things at the worst case scenario. Like if all else goes wrong, so am I still going to be at a comfortable zone to afford this home, be at this job, be at this opportunity, right? These are the things you got to look at. But let's continue diving into this. The average price drop also grew more conservative, falling just 6% in February, down from 8% in December. So continuous decline. Buyer incentives such as mortgage rate buy downs, paying towards closing costs or repairs were also limited as mortgage rates had appeared to stabilize earlier this month. Only 57% of builders offer incentives in February, down from 62% in December and 59% in November. Yeah, you got something called seller concession. But typically it comes off the buyer's end. Some sellers, like home builders, they'll put that inside of their package. But really, like for me, when I offered the price of my home, I had to put another $15,000 on top of that to make sure my closing costs were covered, and we did the seller concession that way. So technically, they didn't pay for my closing costs. I did it, but I had to come up at a higher price. Yeah, these things can happen, right? Where these home builders can actually offer that. So meaning you don't have to, as a buyer, you don't have to come up with the extra $15,000. Like in my case, right? They just cover it for you automatically. They say you just get into the home, get the mortgage, let's close and make it happen. But it looks like there's less and less incentives of that. You can't ask them to repair this. Can you make this fence here for me? They're cutting back a lot much more on that. That's just the nature of how the economy is going right now and everything. The opportunity to negotiate incentives may not last long. But there are some bright sides to this. So according to Reynolds, one of his clients, Seattle, recently got a 17% home price reduction and additional contingency paid for by the seller, deals that were hard to attain a year ago because they were trying to get rid of a home. So you are seeing some positivity that is coming out of this. And here's another one for you. I have a client that just bought a house that was on the market for over 7 months and it didn't sell. Right when it came off the market, we jumped on it and negotiated $500,000 off the previously listed price. That is insane. That must have been a $2 million home because I don't know no home that's probably selling for $900,000. You get a $500,000 off. That's a 50% off bargain. That's like going into the store and it's Black Friday. That would be amazing. But that's not the case for everybody, right? We are seeing some positive. There are places that it's not so positive. But let's get into some real home use case scenario and see what's been going on with the market, right? All right, so we already got New York down packed. So New York, where we at? 21,000 listings. How much are price reduced? 2,000. So we're at about a 10% mark, which is not a strong indicator. But let's see multifamilies now, right? Because that's all I look for is multifamily. 4,000 and price reduced. we're at 525. So that's still like a little over 10%. It's not too bad. Let's clear this out and let's look more in like the New Jersey area, right? So it's kind of my territory. All right, so let's filter this down. We on reset. Make sure we see all homes, and now let's see price reduced in that area. This went down from last month, actually. What about multifamily? Let's go back. We select multifamily, right? We're at 2,000, and if we see how many were price reduced, 252. So it's all about 10% in like the New York area and such. I'm going to jump to a new area which a friend of mine have told me about, and it's Hartford, Connecticut. Right? So let's check over there. Reset. 80 homes. How many are price reduced? 7. Not that bad. It's definitely not a bargain going on over there. So that's definitely a new area for me to explore. We're going to check out some price to rental ratio over there in a little bit. But just checking my hot spots. So Jacksonville, Florida. Let's see over there what's been going on over there. Jacksonville, Warm City. Reset. Price reduced from 3,000 to about a third. All right. So meaning when it's about a third, I think it's a good sign that it's more of a buyer side than a seller side. So you're going to get some bargains, deals, and negotiation power in that case. Once it's like closer to the 30% mark. What other area can we look at? So let's look at Baltimore, actually. Baltimore, Maryland. Filter. $1,000. 1,000 homes. Price reduced. 328. So that's also closer to the buyer side. So that would be an indicator for me. I could look around there. Let's look in Trenton, New Jersey. I know I'm kind of jumping around all over, but this is how I look for places. So we at 226 homes, price reduced. We're at 29, so it's around 10%. Not a strong indicator there. Philadelphia Eagles, by the way, lost. I was rooting for them, not because I'm a fan of them, but really I wanted for them to get another shot opportunity. But shout out to Mahomes. He killed it. The man was injured and he still did amazing. It was so close of a game. Those were two great teams. I think it was really a tied game because there was a 3-point difference. They just did a time trick at the end. It was more psychological for the last minute that happened in the game, but it was an amazing game. All right, so we got 1/6 of the home. So at 2,000 home, I would say it's a good indicator, but it's not at 1/3. It's more close to like the 16% mark. It's not a strong indicator there. Let's look at Houston, Texas. What's going on in Houston, Texas, y'all? 7,000 homes listed. Price reduced. 1,000. Not a strong indicator there. Austin, Texas, maybe. 2,000 home. Price reduced. 676. Yeah, that's an indicator right there. That right there, you probably want to check out Austin, Texas. See what's going on over there, because that sounds like it's leaning more towards the buyer side. And Dallas, Texas, we are at 1,000 home, price reduced, 425. That is almost half. That is the strongest of all of them in terms of a buyer side. I would see for that. That's happening when you see numbers are getting that high. Those are opportunities, places where you can see opportunities that are happening. Now, let's go out further west. Let's check Seattle because that's the place that the other person was talking about. All right, so Seattle, make sure we're on reset. 1,000 homes, price reduced, about 200 homes. So it's about a fifth, 20%. Not a huge thing, but if they've been sitting around in the market like the guy was stating for a while, then of course you have the opportunity to do your thing right there. San Francisco, which is where Silicon Valley is. Let's see what's happening there. Surrounded by all water. Let's reset. 1,000 home. Price reduced 112. So about 10%. It's similar to the New York region. So it's not too bad of a indicator I see right there. Let's check Los Angeles. California. Not that I want to live there, but it's 4,000 home listed, price reduced 7. It's getting close to that 25% mark we could see, but it's not a strong indicator there. Any other ones we should look at? I think Milwaukee, Wisconsin. Reset. 484. Price reduced 96. About 20%. It's not a huge indicator, but it looked like it's leaning there. And let's check Columbus, Ohio. All right, 750 homes, 150. It's about a fifth, so that's 20%. It's not a huge indicator there. So those are the markets where I pay attention to and see what's going on to see how things are shifting. Again, there's always opportunities, and I'm going to show you how. So let's look at Hartford, Connecticut, for example, right? We always want to break these numbers down. Let's reset all the way. How can you make this make sense even at the rate that things are right now? So let's look for a multifamily. Not price reduced, right? I want to see everything that's going on. So this is my list. So let's look at these homes, and I'm going to randomly pick one out that I think might be good. So let's see. All right, so let's look at this one. It's been on the market for 101 days, right? So do you have any photos? I do not like when they do not have photos. Let's make sure this is not a home as short sale. Break 3 unit with excellent income potential. Close to Hartford Hospital. So it doesn't look like there's anything wrong with it. But it says property to convey as is. So let's skip that one because I like to have someone that is willing to do some negotiation. Whenever I hear as is seller, I kind of run away. I'm just like, I don't know. All right, so maybe we could check this one out for $350,000, 53 School Street. Right, this is not old brick, but it's close enough. Attention investors and owner occupants, if you're looking for a 3-family, they always hype it up that way. But I just want to check to see if it's not as is, and it doesn't look like there's anything that states it's as is. So it's been up for 3 days, 40 saves. The reason you want to look at the amount of saves to the amount of days it's been on the market tells you how much attention has been on this home. What is the chance that you likely would have to pay at this price or even higher? So at 40 saves in 3 days means this home is getting quite a bit of attention, right? So we'll do a math on it and check on another one afterwards. Principal on this home is $350,000, but let's say we gotta come up with $15,000 to close, so that puts us at $365,000, right? Bam. Down payment, we use an FHA, so let's put 3.5% down. And interest rates, although with FHA they're always lower, about a point lower, the half a point to point lower than the normal rate that you would get on the conventional. But I always shoot for the worst case scenario, right? So we know interest rates peak 7, so let's use 7 as that number. We don't want no surprises. We want to make sure we're always expecting the worst. So when the deal happens, we got the best deal ever. This didn't list the property taxes, but we could say it's at $8,000 and change. So I'm going to use 2.25%, right? Let's say it's at $8,200. Homeowners insurance for a house this big, I'm going to go with $3,000 a year. And no HOA fees because it's a home. But again, instead of putting all the utilities right in here, I also put it in the HOA fee so I could just enter one number. It's just a thing I do. For 3 units, let's say your expenses are like $500 a month with common utilities and things like that, right? So where are we with this cost? $4,000 monthly. Okay, so what would it take for this home to make sense? It's a 3-family, so you're expected to live in one of these units and rent out 2. So how can you make this work? Let's see, right? And I don't think this has a finished basement. Does it say? Does not. It has a driveway, which is cool, but driveway doesn't bring money. All right, basement is unfinished. So you would have to live inside of one of these units, the upper ones, right? Not the basement, and rent out the other 2. So let's look at the rental market in that area. So let's go for rent. Let's do a reset. We do for rent. We reset all. And since all these apartments were 3 bedrooms, so we look for 3 bedrooms, 1 bath, and see what we got. What is the average, right? I always shoot for the middle. Do not ever do the bottom price. That is not you. You want to be around the middle. So we go around the middle and we see that we are around 1,500. So that would make it reasonable for you to rent each unit at 1,500. So let's do a quick math, right? So unit 1, 1,500. Unit 2, 1,500. And you got to stay in the third unit, right? So you're only bringing in 3,000 a month. Therefore, you are responsible for the remaining 1,000 and change in that mortgage. So for me, nah, I would skip that home. I don't think it would make sense. If it had a finished basement, maybe, but that's not the case. So let's go back to sell and reset, see if we could find another opportunity, right? Last time I was looking, I think it was in Atlantic City. But let's see if we could find a home in Hartford, Connecticut. All right, so back to results. I want to see the list and make sure we're in multifamily as well. So let me uncheck everything for multifamily. We want to start investing first before we start living luxurious, right? Let's see. So we know 350 did not work, right, for the area. So it has to have 4 bathrooms for it to work. And looks like we're not finding anything quite a bit there. Nothing at all. Nothing. Maybe this home could work, but I don't know. Let's take a look at this. Let's see if this is not a short sale. Fully rented duplex, so it's 2 units. All right, so no, this is not gonna work. Automatically, I know it's 2 units. What are you gonna do with that? You need 3 or more for it to really work. This home looks beat up. So the market there is a little shaky from what it seems. So let's go to Atlantic City, actually, because that's where I've been seeing some opportunities. We reset everything one more time, select multifamily, and let's check some homes. So checking out this home here that we found in Atlantic City, we see that it's been in the market for 17 days, has 72 saves. So it has some traction. Reading this, it says it has 4 units in the main building, right? And then what else does it say? All 3 units renovated, top. And in the main building, there's a 1 bedroom, 1 bathroom in the garden level. So that's probably like your basement, which you can live in. And the 5th unit is a cottage, a 1 bedroom, 1 bathroom. So this is pretty good. It's 5 units, and let's break down the math to see what that could be. So it looks like it has 3 apartments at 3 bedrooms and 2 baths. And it has 1 unit that's 1 bedroom, 1 bath. That's where you're going to stay. And then the 5th unit, the cottage, which you can also stay there as well, is 1 bedroom, 1 bath. Let's look at this map and what it could be. So listing price is at $645. Property tax is at $7,800. Let's break down the monthly cost. So let's say we got $20,000 in closing, so that's $665, right? And then down payment is 3.5%. Interest rate, let's say, is 7%. Again, we want to shoot for worst case. Mortgage insurance is already calculated for me. Property taxes is not that high. Wow, they're killing it. Let's do 1.5 at, we'll go for 9,000. Shoot for worst case. Insurance for a home this big, I would shoot for $3,500 because I think I know that area would probably require flood insurance as well. Really no HOA fees, but again, we use that number for our utilities and expenses. Since this is a bigger home, we're gonna shoot for $600. So we're at total $6,500. So in order for this to work, it would have to mean that all 4 of the units and me staying in the cottage for free pays for this amount right here. Can it do this? Let's see. So we know we have 3 bedrooms, 2 bathrooms, right? As it's stated here. And it has 1 bedroom, 1 bath in the garden level and a cottage. And the 5th unit, 1 bedroom, 1 bath. This looks like a huge building. Gigantic, right? It's huge. So I'm guessing, so the top 3 levels is where the 3 bedrooms, 2 baths are. Trying to see where the cottage is. All right, so that looked like this is where the cottage is. It looked like a separate little house, which is pretty cool and amazing. But now let's look at the rental, right? Reset everything. Let's put 3 bedrooms, 2 bath. There we go. There goes the bathroom. What do they go for? Wow. In the low end, it's $2,000, right? We don't find nothing for less. If we went in the absolute low end, it's $2,000. But let's say 1,800, because this is a whole house versus an apartment. So let's say 1,800, right? We're a bit lower. And to do that comparable, you could just put 3 bedroom, 1 bath to see what those go for. You kind of be in the middle. We're definitely not doing 1,000. That's just not happening. So yeah, like 1,800 seems to be like a middle ground for 3 bedrooms there, not considering the second bathroom. So we'll take that number. Now let's go for the 1 bedrooms. How much do that go for? Okay, so we go for our middle number. So to calculate this math, let's just pull out our calculator. We are at 1,800 when we have 3 of these units times 3 goes to 5,400, plus the 1 bedroom, 1 bath was for 1,300. We are at 6,700, which is over what the price we needed to beat. And let's compute that one more time, what that was. So let me do a reset. I think I can go to recently viewed, and this one, principal was at 665 because we needed the closing costs. Down payment, we were doing FHA. Interest rates, we used the worst case, 7%. No surprises. Mortgage insurance. Oh, that's why this is low. I put 6,000. Like, wait, why is this $52? All right, so it's 524. That's correct. Property taxes, we are going for 1.5%, so that's 9,975. Home insurance, we wanted 3,500 because the home is pretty big and it's close to flood area. And again, no HOA fees, but we use that as our utility cost. Put 600 for that, and we are at total 6,500 in monthly cost. And how much are we bringing in? 6,700. We are cash flowing, baby. We are cash flowing. So is this a good opportunity? Yes, it surely is. And this is how you shop for that real estate if you're getting a multifamily. Although the profit looks tiny, right? You're making like about $200 a month. But remember, you're living in one for free. You get a lot of tax incentives, depreciation, cost of the home, property taxes, the homeowner's insurance, the bills that you get to pay for the shared common utilities, right? You get to deduct all these things at once. And that way your profit margin kind of goes from like 100 something to maybe like a couple $1,000s. That's how you have to look at real estate. The only thing that you don't deduct really is the principal, because the principal is the equity that's kept on the home. And who's paying for that? It's the renter that you're doing. And then the extra cash that you're getting from work, other businesses that you're doing, you're not putting into the home unless you got to repair something. Instead, you put it towards investments. The market is bad right now. The stock market is down. Index mutual funds, they're all down, right? There's opportunities where you can take the extra cash and put it towards there that you're getting from working, your business, your clients, and things that you're building up. Do not put it into the equity of the home. If you did 20%, your margins would have been a lot better. But I don't care for that margin because I'm using the cash to invest it. That's my tactic, right? I don't care for the bigger real estate investment margins. It's probably when you get to like your 5th, 6th, 7th, 8th, 9th, 10th home, then you'll start rolling in like $10,000, $15,000 profit margins on a monthly basis. And now we're talking a different ball game. But as a start, just get your foot in the door. Just get going with something. You can do it. I did it. You're able to do it too. Don't believe the hype about you gotta pay PMI if you don't put 20% down. Therefore, I gotta wait to save 20%. If I did that, I wouldn't be here right now. I have over $350,000 of equity inside of this home because of the home prices around this area right now, right? And I did it on FHA. I didn't put 20% down to build that equity. Whether you put 20% down or 3.5% down, your equity is going to appreciate the same. So you got to think about where is the cost of investment. It's like, where do I want to put towards the cost of investment? Yes, you save money on a conventional, but I feel that if you are doing these other investment tactics, it works out in your favor. If you're not, if you're just sitting there letting that money sit in the bank, then yes, it's more advantageous to put a larger down payment and do it that way. I hope you found this insightful. This is pretty much where the market is right now. It looks like we are going through a downward trend. I'm looking forward to sharing with you what's going on next month. I'm very optimistic about where the market is going. There are opportunities there. You just have to look for them and see where they're at. Even if the interest rates are at a certain point, the math just has to make sense. If you're looking for a single family to just live in with your family, that's a different scenario. Yes, you're hurting right now because all you're doing is just moving to a home, pay the mortgage. But if you are looking at it from an investment perspective, there are opportunities still there. So if you found this insightful, please share it with someone. I always love and welcome your feedback. If there's anything you want me to talk about, share with you, or anything that was confusing and you want me to unpack it differently or spend more time on it so that you can understand it better, please do let me know, because when we all thrive and elevate each other, we all succeed a lot further. So you help me succeed when I get your feedback, same way I can help you succeed, vice versa. Peace and love. Have an amazing one, and I'll see y'all on the next monthly real estate update.